Well, hello there. I'm Kevin Amrine with the Florida Insurance School of Continuing Education. I am being joined today by a very special guest, my friend, my colleague, probably our most popular instructor, probably our most popular instructor at the FISCE, the amazing Cathy Trishan. Cathy, I think you're awesome. I wish we were coming together under different circumstances right now, but sometimes you got to give the people what they're asking for. And as you well know, we're getting a lot of questions as insurance people about coronavirus, COVID-19, whatever, that massive disruption that's ruining things for a lot of people right now, whatever you want to call it. And we felt it was appropriate here at the school to address this because we're getting so many questions. So here's what Cathy has so wonderfully agreed to do with me. We're going to go through some questions that I've received from students of the school here over the last few weeks. Cathy is going to play the role of the coverage expert and just look at some just standard insurance policy language and get some answers to some questions that you either have already gotten as an insurance agent or that you absolutely will get soon. We are going to record this conversation. We're going to keep it as short as possible, no more than an hour, maybe less. We're going to record this. We're going to put it on the internet for anybody to watch for free. There's a lot of folks out there that are developing course material on this stuff and doing live courses on it and so forth. And I can't say we won't offer that at some point, but this is too time sensitive. We've got to get something out there to help our folks now. So this is the quickest and best way to do it. So it's a free video. I hope that you'll get something from it and that you'll pass it along to your colleagues and maybe even your customers. So again, I'm Kevin with the Florida Insurance School of CE. This is Cathy. Without further ado, ladies and gents, shall we get started? Cathy, what do you think? You want to do this?
Ready, Kevin. Thank you.
Yeah. Anyway, so again, I wish it were better circumstances if you want to throw a joke in once in a while.
Oh, that just seems wrong.
Who knows? Anyway, let's get started. I'm going to look over at my list of questions here.
Okay.
We're going to start with some general business insurance issues. We'll talk about some work from home concerns because a lot of folks are obviously worried about that too. General business insurance issues. Now, probably the first thing a lot of people think of, and I'm saying this because of the questions we've been getting, are the business exposure of business income or time element, whatever folks want to call it. So here's a question from Gary in Fort Myers, and it's kind of a loaded question, but I'll give it to you and you can just take it and run with it. Gary is asking, if I shut down my store because an employee has the coronavirus and I am concerned about contamination, will I be covered for my loss of income? And then Gary goes on to say, if the government requires a quarantine measure that prevents customers from accessing my business, will my business insurance cover lost revenue? And then finally, if I can show a measurable reduction in business income due to my inability to get supplies, materials, services from vendors, so supply chain concerns, will my business insurance cover my lost revenue? So basically running the gamut of all of the time element business income concerns. So Cathy, take it away.
Yeah, these are all great questions, Kevin. And for any of you who don't know me from webinars, I'm an insurance agent. These are exactly the same kinds of questions that I've been getting from my customers last week and now starting into this week. So let's do an overview of all of the business income issues so that we can help our clients with some of these questions. So business interruption, business income, couple of things we need to keep in mind. Most of the business income losses that our customers are going to sustain are not because something happened at a particular premises. The business income losses are going to happen because people are not going out. People are staying in now, and that's going to be a general economic slowdown. Insurance isn't going to help with that. We've got a lot of businesses that are voluntarily shutting down as a protective measure. They want to make sure their employees are safe. They want to make sure their customers are safe. Another thing that we're starting to see, and this is something I'm just seeing in the past couple of days now, is local and state governments starting to mandate that businesses shut down. I just read something on my phone a couple of minutes before where restaurants and bars and I think gyms in my area are all being forced to shut down at 8 p.m. tonight and not open back up again until the governor says so. So this is something else our customers are dealing with. What we need to remember when we talk about business income coverage is it responds when there's a direct physical loss of or damage to property. Now, we're going to get into what kind of property we're talking about in a minute, but a lot of these situations that I've just described to you, that general business slowdown, that voluntary shutdown, that government saying you can't open your restaurant because we're concerned about people gathering together. This has nothing to do with direct physical loss of or damage to property, which is tough for a lot of our customers to understand and to deal with. So let's talk now about the three different kinds of business income coverage that could potentially come into play in these situations. Now, I want to be clear here. I'm talking about the kinds of coverages that most of our customers are likely to buy. The customers who buy a BOP or the customers who buy a package policy. There are some other kinds of policies out there for things like trade disruption and political risk, and we're not going there because that's something that I don't think the majority of our customers are purchasing. So let's stick with the basic coverages. If you buy business income coverage, you automatically get civil authority coverage. Dependent properties coverage, that could be an endorsement. I know some of my insurance companies include it in an enhancement endorsement. So these are the three that we're going to be talking about. So regular business income coverage, this is triggered when there's a necessary suspension of operations. Now, a suspension of operations could be your facility shut down completely. It could be that your operations have had to slow down. For example, in some areas, restaurants can't have people coming in, but they can give takeout. So it's going to be a reduction or a lessening of operations. It could be that your premises is untenable if it's a lesser's risk exposure or uninhabitable in some way. So we've got to have that necessary suspension of operations, and that suspension has to be caused by direct physical loss of or damage to property. This is always going to be our trigger. Once we cover the other two kinds of business income coverage, I'll talk a little bit more about what that might mean, but it has to do with damage to property. And in this case, it's property at the insured's premises. And then, of course, we have the next important component, which is we've got to have a covered cause of loss. So even if we've met the other parts of our insuring agreement, if you will, do we have a covered cause of loss? And we're going to come back and talk a little bit more about that in a moment. So this is our basic business income coverage.
Cathy.
Now, there's another coverage that's included in our business income policies. It's called civil authority. Now, a lot of times when my insureds hear civil authority, they get very optimistic. They say, oh, this is great. The town said I have to close down. The town is a civil authority, so I should be covered.
Yep.
Unfortunately, that's not what civil authority coverage means. With civil authority coverage, the trigger here is that a civil authority prohibits access to your insured's premises, but again, it has to do with damage to property. This time, property within a mile of the insured's premises. Now, that 1 mile limitation, that's ISO language. Some of your carriers may have a different geographical area, but it all comes down to damage to property nearby, again, by a covered cause of loss. And the civil authority's action has to be in response to the dangerous physical conditions or to allow them to have unimpeded access to the damaged property. At this point, that's not what's happening. What we're seeing happen is governments are shutting down businesses because they don't want people congregating. So that's our second potential coverage, civil authority.
The civil authority, I think when I talk to people about time element, even insurance professionals, just seeing the term, this is where a lot of the problem is going to be, right here. You see the term civil authority, and you just think, well, this is tailor made for what's happening right now.
Right.
And when you look at the fine print and say, well, it still needs to be triggered by a covered cause of loss, and you hear the argument, well, isn't that the cause of loss? So I'm glad you're really harping on that, because quite a few of the questions I've gotten they'll cite that language and say, well, then aren't we clear? And obviously, as you just very eloquently explained, no, no, we're not. So
Yeah.
sorry to interrupt.
No, please. I'm happy to have you chime in. It's always nice to have these conversations. And this is the problem sometimes. First of all, our customers don't often read their policies. And when they do, I find that they tend to look for certain words that will lead them to believe that there's coverage without really reading it in detail. And truly, even if they did read it in detail, are they going to appreciate all of the implications of it?
Right.
Most probably would not. So, yeah, I think you're right. This is one that I'm answering a lot of questions about.
I as well. Yep.
Yes. Now, this next one, this goes to the supply chain issue that your third question dealt with. And we call it dependent properties business income. It might be called contingent business income. I see that term as well. Here again, we're talking about some kind of damage to property by a covered cause of loss, but this time the property that is damaged is not your insured's, it's not a neighbor's, it's the property of someone upon which your insured depends. Now, it could be your insured's supplier. In the world of ISO, we would call that a contributing location. It could be your insured's customer. Again, in ISO language, we would call that a recipient location. Could be somebody who does your insured's manufacturing. If one of these businesses suffers damage by a covered cause of loss, your insured is going to have a suspension of operations. But here again, we've got to have physical loss of or damage to property by a covered peril. Keep in mind too that the dependent property often needs to be scheduled. I know that a lot of my carriers have a small amount of dependent properties business income coverage built into a coverage enhancement. But if your insured wants higher limits or wants his full policy limit to apply to a dependent property, very often he's going to have to schedule that property. And then last but not least, we have this coverage territory issue. Look at all of the disruption that is happening to the supply chain because of the problems in China. China is not part of the coverage territory in most of our policies. Usually we're talking about the US, its territories and possessions, probably Canada, but most of our policies don't extend beyond that. So these are the three kinds of coverage we can look to. But now let's look and see where they may or may not apply when we start to see the claims come in.
Well, and I was
So,
going to say, the coverage territory issue is obviously a problem, but even if you can find a policy that will extend the coverage territory, ISO has an endorsement to do that on a limited basis. It that whole mess of it still has to be triggered by a direct physical damage.
right.
Even if somebody can resolve the coverage territory issue, if they're going to say no, my policy's worldwide, it's warehouse to warehouse, the problem still remains that okay, but why did the factory in China have the problem? Was it because of a fire? Was it because of a flood, a windstorm? And if it's a virus, then well, we haven't. Good news, you've got a better coverage territory. Bad news, it still isn't a covered loss.
We
So
still have a problem. There are so many things that are going to go wrong here.
not a
So
lot.
here are the three problems. First of all, was it a necessary suspension of operations? If your insured is voluntarily shutting down or there's just that general slowdown in business, that's not going to hit this point. The bigger point, I think, comes in question two. Does this kind of contamination constitute direct physical loss or damage? In each of the three kinds of business income coverage that I mentioned, we have some requirement for there to be direct physical loss. So now we ask the question, what does that mean? Can this kind of contamination be considered direct physical loss? Now, there's a lot of case law on this issue, and more courts than not will likely say, no, this does not constitute direct physical loss or damage. There have been cases, for example, where there's been debris and dust and mold, things that could be cleaned up. And courts have said, no, that's not direct physical loss. The building, the structure has not been altered in some way. Now, there are some court cases on the other side, so I would never say absolutely not, this would not be considered direct physical loss or damage. As an example, we have some case law in New Jersey where there was a case involving ammonia contamination, a gas. And the court there said, yeah, that could be direct physical loss or damage. So I would say probably not. We probably do not have direct physical loss or damage, but I would very strongly suggest, agents, that you don't make this determination. When your client calls you to ask these questions about coverage, they want to put in a claim because they've had some contamination on their premises and they think they should have a business income loss. I would very strongly suggest that you report that claim to the carrier and let the carrier make that coverage determination. The answer is probably going to be no. We don't believe this is a direct physical loss or damage, but we don't want to be the ones to make that case because, as I mentioned, there is some case law on the other side of this. Now, even if we have direct physical loss or damage, and that's a big if we can successfully make that argument, well, now we have to start to look at our exclusions because that's the last part of the problem that's going to cause an issue for a lot of our clients. And this first one is going to be the biggie. This is the exclusion of loss due to virus or bacteria. Now, ISO came out with a version of this in 2006. And let me tell you what ISO told the states when it filed this endorsement with the states. It said, we're specifically trying to exclude things like viral and bacterial contaminants like rotavirus, SARS, the avian flu, Legionella, anthrax. The reason that this exclusion was created and filed for approval with state regulators is our insurance policies did not want to pay the kinds of claims that we're about to start seeing with coronavirus. So that's the biggie that's going to knock out coverage. And I'm not saying for certain that it's going to be on your policy, but I know that it is on many, many policies out there. Yeah. If that one isn't on your policy or that one isn't being cited, I do know that there are going to be some carriers pulling out the pollution exclusion. Our policy forms exclude discharge, dispersal, seepage, migration, release, or escape of pollutants unless it's caused by a specified cause of loss. So does a viral contaminant meet the definition of pollutant? It depends. Here again, case law is all over the place. If you look at what could be considered a pollutant in one state, it could be dramatically different than in another state. So it would not surprise me at all to see this kind of exclusion referenced in a lot of the denial letters that are going to be issued. And then could we have others out there? Lots of carriers have their own exclusions. So I would very strongly recommend that when you're discussing these issues with your clients, that you take a look at the language that is specific to your policy, because there are so many different ways that coverage can be taken away. So just be careful here.
And like you just explained, these are exclusions. This may be a non-issue. We may not even get to the exclusions. We may not get to the insuring agreement where you talked about on the previous slide. You'd have to think that between the limitations in the insuring agreement, between the limitations in the exclusions, without some kind of government intervention, which, occasionally that can happen. The government will step in, the state will step in, and they'll say, no, we're going to override this, and we're going to try to get the insurance industry to bear some of the financial burden. You'd have to think, looking at this language, without some drastic measure like that, people should be uninspired, unfortunately.
Yes, I would agree. I don't want to ever give my client a false sense of optimism that they're going to have any coverage in a situation like this, because as you correctly pointed out, if we don't meet the insuring agreement requirement, which is direct physical loss or damage, we don't even need to turn to the exclusion section. We're not going to trigger coverage. The reason that I mentioned that there is another point of view is because I worry about insurance agents sometimes saying to their client, oh, this isn't covered, we're not going to put a claim in. And then it turns out that maybe these claims are being interpreted this way. And as an insurance agent, I don't ever want to be on the hook for either unfairly taking something away from my client or acting as the insurance company. I'm the agent. I don't have any right to be denying claims. So I always suggest let the insurance company make the final coverage determination. But when I'm speaking with my clients, I'm very clear. I say things like, I do not expect there to be any coverage for this because you don't have direct physical loss or damage to the property. But let's just put it in and see what the carrier has to say about it. I think we want to be careful as agents to stay in our lane and not become the claims adjuster.
I we are at a stage, at least during the day we recorded this video, where I think people are rightfully in mitigation panic mode,
Yeah.
mitigation mode. Everybody's trying to focus their energy on that, and the time will come when they're going to sort this out, and the blame game is going to start, and the attorneys are going to get involved. And we all know that. We see that happen after hurricanes, and insurance companies will deny claims initially. And then clever legal folks or insurance folks will say, well, we can find a way. There's something in the language here. There's an undefined term we can hang our hat on here and try to make this insurance company pay for at least some of this loss. And I like that you just said it's bleak. It's bleak based on every practical interpretation of this language. But not playing the role of claims adjuster, I think, is a very valuable takeaway for agents here, because we just don't know. We don't know where they're going to go with this. It's very possible they take it in an entirely different direction. So very good advice, Cathy.
Thank you, Kevin.
As usual.
Now, I feel like I'm being very bleak, so I wanted to bring some good things to the table here.
Yeah.
Okay.
Positive.
I'm
Okay.
trying to be a little positive here. Let's take a look at some carrier enhancements. I've been trying very hard to find some positive things that some of my insurers have been doing in the way of communicable disease. And here are just a few things that I found. Here I have one carrier who includes some coverage for conference cancellation. So your insured is supposed to send somebody to a conference, they've paid all this money, and then the conference got canceled because of the communicable disease outbreak. Well, this carrier has $25,000 of coverage for that. That's a nice feature. Now, do most policies have it? No, but it is something. Here's another one that I like a lot. This carrier will give a little bit of coverage for business income and extra expense, $50,000, if a public health authority orders the shutdown if the disease is present in a particular location. So when we see coverage enhancements like this on our policy, at least there's a little bit of hope that our insureds might have at least a few dollars of coverage. So here again, we always want to be careful, I think, when we're answering insurance questions about being too general, because we always have to look at the language in a specific policy. And sometimes when you do, you find a nice surprise. This carrier also has some crisis communication expense coverage. So if you have a communicable disease and now you need to do a little bit of damage control in the PR department, maybe this form can help you a little bit. So always take a look at your policy to see what your policy says. And then just one last topic here on the business. Oh, I'm sorry, Kevin. I didn't mean to interrupt you. Go ahead.
I was just going to say, just to be clear, these are coverage enhancements that existed before. This isn't a knee-jerk reaction. This isn't an insurance company saying, going forward, we're not introducing anything new or piggybacking on a current crisis or anything. I mean, this stuff is already there. Right?
That's an excellent point. These forms have been this way for years already, right, with a company making an active decision to help their insureds out in situations like this. Now, do I think they expected what they're going to be facing today? No, but this is the reason for this kind of coverage. And these are exceptions. I have to say, most of my insurers do not have coverages like this, but always take a look. You could be pleasantly surprised. Now, you mentioned, Kevin, knee-jerk reaction. ISO has recently come out with two very specific endorsements. They came out with these in February, and the first is business interruption, limited coverage for certain civil authority orders relating to coronavirus. And the second one even includes some coverage if certain modes of transportation are going to be restricted. Now, these came out not too long ago. They don't even have form numbers. The reason they don't have form numbers is ISO did not file them with any state insurance departments. Basically, what ISO said is, here are some endorsements. We're going to give you the opportunity to offer some coverage if you would like to do that. If you want to do that, you just go ahead and file it with the state insurance department. Now, personally, I'm having a hard time imagining an insurer wanting to pick up liability for this, but if they should want to offer that, at least ISO has made some tools available to them. I have not heard anything about carriers filing this, but of course, that's something that I wouldn't be privy to being on the agent side as opposed to a company side.
It's something, I guess.
That's something.
If anybody's going to offer this, anyway,
we'd be surprised. I just want you to know it's out there.
Yeah, well, and it is out there, and these are ISO forms, so it's worth pointing out. I mean, who knows? Who knows what the market will?
Who knows?
When it's all done.
Yeah, I think too, Kevin, the fact that ISO saw fit to publish these particular endorsements supports the idea that this isn't covered, because if this were covered, we wouldn't need an endorsement to make it covered. So something else to keep in mind there.
Something else to keep in mind. As if they didn't, hint at that enough. But thank you for providing this info. This is something that a lot of folks watching the video probably are unaware of. So this is good information here too.
Good. And that's about it for business income.
Well, that's a lot of great stuff, and those are, to me, the most common questions from how do I counsel my business owner through this. So I'm glad that we spent so much time on that. We got a couple of other coverage angles to discuss here. I'll go ahead and move to the next one. So Maria from Miami is asking this question and is giving an example, posing it as an example. Maria says, say I require my employees to continue coming to the office or travel for work, and one of them is diagnosed with COVID-19 or coronavirus, whatever. Is that employee entitled to work comp benefits? What if they found a way to file a liability claim against me? Will my business insurance cover costs associated with this claim? I will preface that part of the question by saying, Cathy and I are not attorneys. We cannot tell you the law in every state in terms of gross negligence or how you can supersede workers' comp law and still be sued as an employer if benefits were eligible under comp. That's a great question. I like how Maria phrased it. We'll address it, but obviously keep that. There's no way for us to know for sure if you could even be legally liable in a situation like this, and if so, would you be required to pay anything? So preface it by saying that, and Cathy, I'll let you take it from there.
Thank you, Kevin. I always like it when somebody else does the I'm not an attorney disclaimer and I don't have to do it. So thank you.
I give it a lot.
Yeah, of course, this brings us to the workers' comp issue. Now, workers' comp, as Kevin mentioned, this is a very state-specific issue. I am speaking very generally here because potentially we've got people from states all across the country listening to this recording. So we always have to keep in mind that what is going on in your state might not be going on in a different state. So speaking generally, workers' comp responds to accidents and occupational disease. So the question becomes, if I become sick with this virus, is that an occupational disease? Well, here are two basic tests that exist. Did the illness arise out of and in the scope of employment? That's the first one. So while I was doing whatever I was doing when I became exposed, was I somehow benefiting my employer? Well, if I got sick at work, yeah, probably. It might have come out of and in the scope of employment. I don't quite know how I prove that, given that I'm exposed to many people outside my office as well. But remember, we've got two triggers here. The first one is pretty easy to meet. The second one, a little harder. Did the illness arise from conditions particular to the work? So did my working conditions increase the exposure to the illness? And here I would say, probably not. I work in insurance in an insurance agency. If I were a healthcare worker, that could be a different story. If I'm a healthcare worker and I'm treating affected people all day, then it is very likely that somehow that illness arose from conditions peculiar to the work. But for most of us, probably not the case. But what I would suggest here again, agents, I would suggest that you don't try to be claims adjuster here. If your insured calls and says, I've got somebody who is sick, they say they got sick at work, let your insured report that claim as a workers' comp claim and have an adjuster who is very well versed in a particular state's laws be the one to make that determination. We don't ever want to be the one as an agent to say, oh, that's not workers' comp. And your insured certainly should not be the one trying to bar any kind of recovery. Now, the second part of that question was interesting. What if the employee finds a way to sue anyhow? Well, as you mentioned, in most states, we've got workers' comp as the exclusive remedy. Now, are there ways to get around that in certain states? There are. If that claim does come, then we would have to look probably to the employer's liability section of the policy, of the workers' comp policy, to see if any kind of exclusion applies. The CGL is going to say, no, we're not covering anything having to do with an employee injury. But the potential is there at least for employer's liability to respond. I would suspect we're probably not going to see an awful lot of those claims, but I hope not to be surprised to be wrong on that. And that's it for workers' comp. I think that was a great question.
It is. And is there this part of an employer? I'm not expecting an answer to this question. As we go through this, there's so many different angles here. But is there a part of an employer that would want workers' comp to pay? If an employee was required, let's say they work at a restaurant or some retail store, some place that is still open, that would hope that the work comp would cover it because maybe having coverage under work comp is what trips the sole remedy rule in the state so that it protects them from any potential liability. So you got the employer saying, no, please, I want my work comp to cover this because if it doesn't, then that person's going to incur all of their own medical expenses and disability, et cetera, and then they're going to try to say it was my fault. So I don't have an answer to that. But it's just as we go through this and talk about this, you can see where there's just going to be this windfall of I don't want to say windfall of litigation, but the attorneys are gonna have a field day with this stuff. Not that they'll be able to force coverage on anybody or anything, but there's just so many possible angles to this. It's going to be a really fascinating thing to watch.
Oh, I think you're right. Usually when we have something of this magnitude, watching the fallout legally and in the insurance world for the years to come, it's to be a part of that. It's interesting to see.
Well, and how much they're going to have to do, not just to alter standard policy line. Potentially, they might not do anything at all, but maybe make changes to standard policy language, but also the law. You just think about all the work comp laws out there that might have to be tweaked or changed. It's amazing. But in the interest of time, I'll move past this. I had that thought as you were talking. I said, wow, what about this? Oh, please tell me my work comp will cover this. As the employer, not as the injured, not as the ill person. Of course, they're going to want somebody other than themselves, work comp or otherwise, to pay for it. Right. Anyway, but moving on here. So my friend Gary from Gainesville submitted this question. Gary says, if a customer of my business or a guest at an event hosted by my business contracts COVID or coronavirus and says it's due to my negligence. Okay, and I guess Gary is just saying, maybe there was some kind of a recommendation that they not host live events, and he went ahead and went through with it anyway, just as an example. Would my business insurance cover costs associated with this claim? Interesting inquiry there.
Interesting question, and we are going to see suits like this. No doubt about it. There already was one. I remember reading just a couple of days ago about a suit that was filed by somebody who was on one of those cruise ships, one of the cruise ships that was docked off the coast of California for a few days. It was a suit against Princess Cruise Lines, and here's what was alleged. The person who was injured said that the cruise line knew that two previous passengers had coronavirus and the cruise line chose to set sail anyway. They say the cruise line placed profits over passenger safety. This is the kind of thing that we're going to see. You shouldn't have allowed us on the ship. You should have shut down your business and you didn't. You should have canceled that class or that conference. Something you did caused somebody to lose income. That could be the property damage side of the GL policy. And we're looking here at part anyway of the coverage trigger for coverage A, bodily injury and property damage. Now there is a coverage B in the policy that is less likely to be involved. You could find a situation where maybe there is a false arrest or wrongful imprisonment or detention claim if somebody has been quarantined, or perhaps somebody was wrongfully evicted. But I think most of the claims activity is likely to be here in the bodily injury and property damage side. And of course, our terms are defined. Bodily injury does include sickness, which is helpful, but we've got to have an occurrence and we've got to be legally obligated to pay. Now we look at the definition of occurrence down here. This is an accident, including continuous or repeated exposure to substantially the same general harmful conditions. Now this is ISO language, but most GL policies I see that are not ISO have similar language in them. This is not unique language. So let's look at some of the issues that we could have on the GL side. Well, let me start actually with the second one because we started to talk about some examples where that could be alleged, that somebody is legally obligated to pay. So how do you become legally obligated to pay? Most of the examples that we talked about, and I think this was even something that may have been a part of your question, Kevin, I'm trying to remember, was the word negligence. That is an unintentional tort, negligence, failing to live up to a standard of care, and then somebody gets hurt as a result. Could I become legally obligated because I have assumed liability in a contract? That's a possibility. Or maybe there's some kind of a statutory responsibility. That's another possibility. So is the insured legally obligated to pay? Well, that one we're going to figure out when we get to court, and some court decides if your insured is responsible for somebody else becoming ill or somebody else losing income and having a property damage loss. Another question though is the loss caused by an occurrence? Is it accidental? That's the fortuity component there. We've got to have some kind of an occurrence. And usually too, this is going to be decided when we get to court. Is this going to rise to the level of accident? If your insured has deliberately put people in harm's way, that could interfere with that. But I think the important point is when we're talking about general liability coverage, one of the most important benefits of having any kind of liability coverage is having somebody to defend you. And if there is the potential for coverage, and barring any kind of exclusion, which we're going to talk about on the next slide, in many of these cases, the GL carrier is going to have that right and duty to defend the insured. If there's the potential for coverage, if it's possible that the insured could be considered legally obligated to pay, and if it seems likely that this is an occurrence, we're probably going to have to defend, unless we've got an exclusion on the policy. So I went through my exclusions and tried to figure out which ones might apply.
Yep.
Well, the first one I stumbled upon, expected or intended injury. This is part of the policy. So let's say that I have an employee working for me and that employee becomes ill, and I have decided that I am not going to sanitize my establishment. I'm just going to keep letting customers come in. Well, could it be said that that injury was expected? Here again, a court's going to decide whether this exclusion is ultimately going to come into play. But I could see that being alleged in some of the claim denial letters. The next one is an exclusion that I see added by endorsement to a lot of policies, a communicable disease exclusion. And this one is going to be very hard to get around, I think. ISO has a version, a lot of carriers have versions of this communicable disease exclusion. Here again, the pollution exclusion, do I doubt that some carriers will try to say this is a pollutant, and if it's emanating from the premises, then there's going to be no coverage. I would be surprised if at least some carriers weren't using the pollution exclusion. And then could there be other exclusions? Now, one that we're very used to seeing is the fungus or bacteria exclusion. Now, thankfully, we're talking about a viral situation here. So that fungus or bacteria exclusion that we're also used to seeing, the one that primarily targets mold claims, is one that shouldn't come into play. But could you have a carrier who has a broader version of that and perhaps extended that to viral contaminants as well? Anything is possible. So here again, I say we always need to look back at the language of our particular policy to see what's going on. And keep in mind too, that if you have a general liability policy that has some of these problem exclusions, it's not necessarily the case that if you have an umbrella, that those same exclusions will exist on that next layer of coverage. So if a claim comes in and it seems unlikely to you that the GL policy is going to respond because perhaps it has a communicable disease exclusion, always take a look up to the umbrella and see, what does that one say? Might I have a better chance on that side? You never know what you'll find.
Never know. And just like we talked about in the business income section, one thing that it's important for agents to always remember is the policy goes in order. It follows a logical order. There's a reason why the insuring agreement comes before the exclusions. This is all excellent information, but as agents, we have this impulse to, when we get a coverage question, see if we can find an exclusion, and then somebody says, well, I don't think the language of the expected or intended injury is going to work, and this is not a pollutant, and there's no communicable disease, and yes, we're going to pay the lawyers and we're going to pay the claim. But the issue is whether or not there was an occurrence or whether or not there was BI or PD. So it's just a nice reminder, if you're going to go hunting through your policies to find answers to these questions, which you will inevitably get, always follow the order of the policy. Insuring agreements got to be satisfied. Then we get to the exclusions. So, just a procedural tip for agents that are trying to scramble to find answers to questions they never thought they would get. But in any of these policies, just make sure you follow the policy in order. Don't start in the back and work forward. So anyway.
Good advice.
This is what I do, Cathy. I let the smart people like you do the research and give the specific, and then I chime in with, very elementary logistic advice. But anyway, that's that. I'm happy to play a role. Excellent breakdown there, Cathy. I've got another one for you here. You want a question on special events? Is there anything else on the GL that you?
No, I'm good with the GL if you're good.
I wanted to make sure before I move past this.
Yeah.
Here's a question. Sandy in Jacksonville. My customer is hosting a conference this summer or is planning to. Will a special event policy cover him if he needs to cancel this conference because of fears of COVID-19? So you talked about that a little bit maybe earlier, but go ahead and revisit that because that's, I'm sure, an issue that a lot of people are going to.
Yeah, I hate this answer, but it's maybe.
Never sold special events might start getting these questions.
Yeah, we see special event policies on the commercial side. They're also written on the personal side. I know our personal lines department has been getting lots of questions from June brides who are a little bit concerned. So that would be another example of an event cancellation insurance policy. Here are some things to consider. And here primarily you're talking about exclusions, taking into consideration, of course, Kevin's good warning about always looking at the insuring agreement first. Generally, these policies will respond if it's something outside the insured's control. And you would argue that COVID is outside the insured's control, of course. But are there exclusions built into your special events policy for things like communicable disease or other biological risks or organisms? And if there is an exclusion, how is it worded? And here the devil is truly in the details on this one. I remember reading just a few days ago about a festival down in Austin, the South by Southwest, and they checked their event cancellation policy. And sure enough, there are exclusions in there for this kind of thing, which I don't think is something that was on their radar. Some forms have these exclusions, some forms don't. If you try to buy a policy today, if you can even get one, we've been getting emails from some carriers saying we're temporarily halting the sale of these wedding policies, probably until they can make sure they're not going to be covering these types of claims. So if you can get a policy now, it's likely going to have the exclusion. If you've already got the policy, maybe it will apply, maybe it won't. Just read it very carefully. And again, agents, don't be the claims adjuster. Send the claim in and let the claims department be the one to make that determination.
Very good answer. And this might be even if it turns out that these policies are insufficient to cover something like COVID-19, the spread of a disease. This, I think, from inquiries that I've received from colleagues of mine asking about markets in general, this situation might be a catalyst for a lot of independent agents, a lot of insurance people to look at something like special event risk policies that they never considered in the past because maybe that was too niche or the premium was too small. I feel like we're going to get a lot of questions about these policies, and hopefully a lot of folks trying to sell this stuff going forward, and they can use COVID-19 as their example. Who knows if it's going to be a good example, but maybe there's an opportunity for agents going forward here in the special event space. I hope so.
I agree. I find we learn so much from these catastrophes.
Yeah, you got to find the silver linings where you can. Maybe this is an opportunity for agents going forward.
Help the clients.
Mm-hmm. I hope so. Cathy, a couple of quick things on work from home here. A lot of folks are being sent home by their employers to help mitigate the spread of the disease, obviously. We are learning here at the school, just based on inquiries we've received from partners of ours, a lot of businesses are not clear on work from home exposures. Now, we don't have enough. You could spend weeks talking about these.
Yeah.
We're going to talk just about a couple of broad brush things here that I think, I know we're getting questions about. So the first one is kind of a unique work from home question. It's maybe a little outside of what most people think of when they think of working from home, but this will very much become a reality here over the next couple of months. It's a cyber liability question. And so let me share this with you. My friend Joe in Orlando has submitted this question. So Joe says, if an employee works from home on a home computer system that system is or is not, whether it is or is not, secured with our office's high-level security / firewall. So basically what he's saying is, I've been told to work from home. My office has all this technology in place to prevent cyber attacks. Maybe my home doesn't. Are cyber incidents stemming from that home computer system that is not as adequately protected as the ones in the agency is covered by my company's cyber insurance policy? That's a very interesting inquiry.
This is a great question. And obviously, anybody who's watching, you know that I heard these questions. It's not just coincidental that all my slides are lining up with Kevin's questions. But I loved this question because it really made me think about something that I hadn't thought about before. Now, I speak regularly on cyber, and I'm regularly talking about the dangers of BYOD, which is bring your own device, and the things that go wrong. But whether or not the cyber policy would actually respond is something that I confess I've not given a whole lot of thought to. So I love that question. So here are some of the things that could be potential problems, potential cyber risks, with the overriding theme being are proper security measures in place when the employee is using his own computer system. So strong passwords, a secure internet connection. Do you have antivirus software? Do you have firewalls? Do you have practices to ensure that sensitive data is kept secure? When I'm at my desk in my office, well, everything's right there for me. I know that everything has been locked down and protected. But when I'm working at home on my laptop, whether it's because I'm quarantined because of COVID or just because I'm having a work at home day, it's really the same question. So I think the things that we're going to learn here are going to extend far beyond we're forced to work at home. We need to think about some of these cyber risks. Now, to go to the question that was posed, Here again, we've got to check your policies. Cyber forms are all over the place. One of the things that I was looking to in researching the answer to this is the definition of computer system. And here again, different forms are going to handle this differently. So what I would suggest you do is take a look at the cyber form and see how it defines computer system. Might it include the employee's own laptop if the employee's own laptop is not part of the network? You want to make sure that that's part of the definition. Another issue, even if it is part of the definition, there are some cyber forms out there that have exclusions in them that apply if certain protections are not in place. You want to make sure that whatever is going on with the employee system, if it is part of the covered computer system, that it has the required protections. And then this last point, most of the better cyber forms I see don't have a lot in the way of very specific things an insured should do. It wouldn't normally say, for example, you've got to update your firewall every 90 days or something like that. Most of them are not that specific. But remember, when your insured completed the application for cyber coverage, he answered a lot of questions about the protections that are in place. Coverage was offered on the basis of those representations. And in my experience, most cyber policy applications are what we call warranty applications. They become a part of the policy. So if the insured has misrepresented something and it turns out that we have a claim and those protections that were warranted are not in place, that could compromise your insured's coverage. So this is an area where we want to be so careful, not just now when we are in the middle of this crisis, but going forward when we have our insureds using their own devices as part of a company's operations. That was a great question. I'm so glad your asker asked that question.
Oh yeah, yeah. The ISO commercial cyber policy has this very odd little morsel in it, and like you said, a lot cyber is still somewhat the Wild West when it comes to coverage forms. But if you're talking about something standard like ISO, and you look at the definition of computer system, which is directly connected to some of the coverage in that policy, it does say that an employee's personally owned device, laptop, phone, whatever, will meet the definition of the named insured, which obviously would be the employer, definition of computer system under the named insured cyber policy if it is subject to the named insured's personal device use policy, which is not a defined term, and the form doesn't explain what a personal device use policy is. It doesn't even say what the parameters of that are. Now, that might be something you find on that warranted application you mentioned, but that when we're using language like this, it's kind of hard not to tell people, well, then if that's what triggers coverage, then just hack together some policy.
Yeah.
You know, just as an employer, just hack together a policy and make your employee acknowledge it. And that makes the device part of the computer system and creates the cyber risk coverage. So there's so much value in just taking a couple of minutes and looking at the form language. You know, a lot of people do. Just that's just one little morsel there. There's so much more we could talk about here. In the interest of time, I'm gonna give you the next two questions from Sarah in Fort Lauderdale. She's gonna explore two different angles here, but I'll read both of these to you at the same time here. The first one is a relatively simple property insurance question, and then the second part is another workers' comp issue. So Sarah asks, if I purchase equipment that I send home with employees, now a lot of employers obviously are making investments in hardware to help their employees work remotely. And her question continues, such as a computer system, so that they can work from home, and it's damaged while in or stolen from their home, will my business insurance cover it? Or is that something a homeowner's policy would have to look towards? And then the second part of that question is, if an employee working from home is injured in his or her home, is that injury covered by my company's work comp policy, which I know is a question a lot of folks have when they're talking about transitioning to a remote workforce. So two questions from Sarah there. I'll let you have those, Cathy.
Okay, so let's start with the question about the damage to the property. Commercial property forms do a very bad job at providing coverage away from the insured's premises. Most forms have very small amounts of coverage for property off premises, so the employee's home would be off premises. And then we have to think about coverage to and from the employee's home. Is there any transit coverage while that property is being moved? So if you take a look at an ISO property form, for example, you might have $10,000 of coverage for property off premises, but only $5,000 in coverage while it's in transit to the employee's home. And then it's got to be in or on a vehicle owned, leased, or operated by the named insured. So that creates all kinds of problems. BOPs are a little bit better, but still you probably only have $10,000 of coverage. So double check and see exactly what your policy form covers. I know a lot of carriers put some additional limits in enhancement endorsements, but you've got to read those very carefully, particularly in the area of transit. And the question on homeowner, and I don't have a slide on the homeowner, is you'd really need to check the policy. You might have a little bit of coverage for some business property while it's on the premises, but oftentimes the dollar amounts are just inadequate. Not to mention, your employee probably doesn't want a homeowner claim because your stuff got damaged while that person is working at home. So probably the best bet there would be to look for coverage on the commercial side, just making sure that the policy is properly enhanced or endorsed, whatever it is that you need to do to get that coverage.
ISO homeowners would chip in $2,500.
Thank you.
That's the biggest check you're going to get from an ISO homeowners policy for damage to personal property that is primarily used for business purposes. It makes no reference to ownership. So the fact that maybe your employer owns it doesn't matter. That policy is going to pay $2,500 tops.
Thank you so much. You can tell who the homeowner guru on this call is. It's not me. Thank you, Kevin, for that. I appreciate it.
I can coverage. Yay, good. Yay me.
Now let's talk about workers' comp. Here again, this is very state specific, so we got to be careful. Workers' comp responds to accidents and occupational disease. So we asked the question, did the accident arise out of and in the course of employment? And here again, if somebody gets hurt at home, did they get hurt because of something they were doing for work? Or I used to give this as an example in workers' comp classes. Did I trip over the dog? Well, sure enough, there's a workers' comp case in Oregon where somebody tripped over the dog and got workers' comp. Why? Because she was on her way to go get fabric samples and her job had something to do with fabric samples. So here again, don't try to be the claims adjuster. Let your client report the claim and have the carrier do the proper investigation. But the fact that somebody is working from home does not change anything with respect to workers' comp. Still has to happen out of and in the course of employment. And then this last point down, I'm sorry, did you want to?
Oh, no. I just said very well said. Thank you, Kathy.
Thank you. This last point here, just be careful. If you have an employee who lives in a state that's a different state than where your office is, you might be pretty close to a border. Just make sure that your policy is set up to provide coverage for the appropriate states, because if they are working from a home office in a particular state, could they now be more likely to look for benefits in their home state as opposed to your office state? Just make sure that the policy is set up correctly. And again, if you're in the middle of the state, this probably isn't an issue, but if you're on the border, it might be. So it pays to be careful.
Excellent insight there. We've got just a minute left, and I had one more question that we included in this Q&A here. This is from Melinda in Islamorada. Melinda is asking another great question here, a work from home issue. If a business client meets the employee at home rather than at the office and is injured at the employee's home, is the injury covered by my business's insurance or the employee's home insurance policy?
Okay, great question. And as a general rule, the unendorsed general liability policy is not location specific. So if the GL, if the BOP is not endorsed, there should not be a problem with getting coverage under the CGL. Problem is, a lot of our CGLs and a lot of our BOPs now have exclusions that look like this. And if your exclusion is the most recent version, which is the 2017 version in the world of ISO, the coverage now applies only at the insured's workplace. So this would definitely be a problem. This is an endorsement you don't really want on any policy to start with, but especially if you have employees working from home, needing clients from home, this is going to definitely compromise coverage. So be very, very careful. And then on the homeowner slide, here you see some language here. This is the definition of business, a trade, profession, or occupation. And then here is the endorsement that says, we're not covering BI or PD arising out of or in connection with a business. So be very careful here to make sure that your GL is going to extend.
Yeah, and it's possible you might be able to endorse the homeowner's policy for some type of business exposure, but obviously, like you said earlier, that's not something a person who has basically been forced into a work from home situation is going to want to do. They're not going to want to have nobody ever wants to have a claim, but I think they would expect that this would be something their employer would handle for them. So a bunch of great stuff there on general insurance issues, business insurance issues, work from home issues. Cathy, I can't thank you enough for taking the time to just entertain these questions that came in to me, and for our helping create this resource that our school can put out there and hopefully teach some insurance folks a few things. Ladies and gentlemen, if you're watching this video, I do want to throw in just a couple of quick little pieces of info for you. For information, first of all, thank you for watching. I hope it was useful to you, and you can tell anybody you want to about this video. You can tell your clients to watch it if you want to. For information regarding the Florida Insurance School of CE's CE webinars, or the webinars that we offer as well through our partner associations in other states, I would request that you visit, if you are a Florida licensee, the website of the FISCE, which is right there on the slide, fisce.com. If you are a licensee outside the state of Florida watching this, and you want to get some more information about the webinars that we do for CE, which are live, not recordings like this one is, live courses that you would see somebody like Cathy, myself, or any number of amazing faculty teach on a variety of subjects, please consult the education schedule on your association's website. We do a lot of these classes, a lot of these webinar classes in a format similar to this, although it's live, and we would love to have you join us. The last thing I need to point out is, if you didn't notice it by now, just underneath the visuals here, Cathy and myself, we have given you a resource where you can submit questions. We're going to post this on the company's YouTube page. Please do not submit questions through YouTube. Please don't do that. If you have questions about any of this insurance stuff, I've tried to give you some guidance on the best way to submit that. Please email those inquiries to the email address that you see just there below me, fisce@fisce.com, for us to accommodate your request, whether it's a question about the content or if you'd like a copy of this slide presentation. In the subject line of your email, it does show you what to do. Type the word question, and then in the body of the email, ask your question, and or the word slides. That'll give us, our team here, the best, quickest way to expedite your request. So again, please don't submit anything through YouTube. Please make sure you email it to the resource provided. Cathy, again, thank you so much. Ladies and gentlemen who have taken the time to watch this video, I hope it's useful to you. And obviously, we wish all of you, we wish you all the best. Maybe next time our recording will be not quite as bleak, Cathy, but we wish you all the best, folks.
Thank
Cheers,
you, Kevin. Thank you.